Clay Patton on the Rural Radio Network, and it is time to take a look at what is happening in a weekly commodity trade. Of course, it's Darrell Holaday, Country Futures in Frankfort, Kansas, that joins us to have just that conversation. And Darrell, when we're looking here at the week's trade, coming into the close, looks like maybe weather is finally starting to play a factor here for the wheat trade, but there still is some big macro market things in question, especially when you have Brazil's president meeting with China's president here late in the week. What do you make of the week's trade?
Well, I do think weather tended to dominate us late. As we went through the week, we saw a lot of choppiness. We had the WASD report on Wednesday that tended to not, I would say for the bulls, it was a little disappointment after the March 1 stocks report indicate you think that USDA or WASD would have lowered their ending stocks projection. They did not. They really didn't do much with supply demand, and that tended to put a little near-term pressure, but it didn't take long to see strength. What's interesting is usually we are talking about China buying U.S. soybeans, and they have bought a lot of beans. They haven't bought anything recently, and they're not going to buy much recently. Near term, they may be switching some from Argentina to here, possibly, although I think maybe that switch is probably done too. But they have been very active in the U.S. corn market over the last 6 weeks. Another solid week of some significant purchases. About 800,000 tons corn. They're running about 40% new crop and 60% old crop, which is somewhat interesting to see that happen. But as you said, on the macroeconomic side, and if you look at the foreign tension between the countries, a lot of concern about China developing relationships that may be and isolating the U.S. to some extent, and that did pressure the grain markets at times as we went through the week. The weather outlook, though, just too dry for southwest Kansas and southeast Colorado, western Oklahoma, and Texas. Just, there was always been some hope, some thoughts as we went through the week, some model runs that indicate maybe something's changing, but when it came into the week, it doesn't look like anything's changing other than we're going to see some moisture in the eastern half of Kansas, in parts of Nebraska, that area. But it's that driest area that just looks like it's blank for the next 2 weeks. That's how it looked as we came to the week's end. That could certainly change, and things. That's what weather does, is change. But at this point in time, it's getting awfully late and certainly damage done. And the wheat market finally rallied on Friday after showing some weakness really most of the week. All the strength, we up 32 cents on that Kansas City wheat on Friday, and that really was where that, if it wouldn't been for that, we'd been lower on the week. Instead, we ended up getting gains of 15 to 17 cents on the week. The planting pace pickup that we did see, we saw some good activity planting both soybeans and corn across the United States, different areas, different regions. A little bit of strength, though. Not only did we see the strength off the corn exports to China, but we also seen strength because of the fact that this storm moving through this weekend is going to bring some snow and rain to the upper Midwest, certainly causing some more delays and cooler temperatures. So that was seen as somewhat supportive as we came to the end of the week. But probably the other factor that certainly came to the forefront as we came I got to Friday was there's rumor that one or two boats of soybeans in Brazil maybe have moved out and headed to the southeast part of the United States. That would not be surprising given the big discount versus the U.S. Gulf values that we've seen out of Brazil. One time this week, $1.75 under U.S. Gulf. It did strengthen up a little bit as we went through the week, but still, that's a big discount. And even something that's $1.20 or $1.30, you could certainly justify moving beans into that region, and it looks like maybe that's happening. We did see, obviously, then that tended to put more pressure on the new crop versus the old crop, and that's what we saw throughout the week in the corn and soybean markets. May corn 666 up 22 on the week. The new crop, though, just up 3 cents at 560. May soybeans up 8 cents, closing at $15 even, but the new crop November down 9, 1301. May Kansas City wheat up 15 at 879. New crop July 863, 17 higher. May crude oil 82.52 up 182 on the week. On the livestock side, just extremely strong record prices again in the cash cattle market. Of course, the week before we sent the 5-state average to 173. Over 173, which was a new record for the 5-state average for steers. This next week will be even the week we just finished. When those numbers are calculated, it'll be another big record. Prices as high as 181 to 186 in the north, even 290, let's say 286 to 295, both in the north and south. When in the meat value, straight cash in the south, top end of 177. So you'd have to call the market solid $2 to $5 higher, depending on the region. Packers still working hard to buy cattle, finding the higher quality cattle, and futures rallied in anticipation and when reality hit. But once again, as normal, we've seen in this has been the common action. We tend to set back off of that good news. We did again on Thursday and Friday, reversed after new highs set early Thursday, reversed lower, and on Friday kind of chopped around and was weaker again with a little less volume. The cash has led the strength up. The futures have never got out in front of this market. That's why the market has been better. Of course, it's contrast to the hog market, which had it the opposite ideas the last 6 months and got out way out ahead of the cash market with big future premiums. And look how it's paid this week, how it's been hurt because of, or over the last several months when the hogs showed up with more than expected. And we've just seen tremendous liquidation in that market. We continue to see that this week. April expired under the $72 level. We did see some late week short covering on Friday that pulled those summer futures off their Thursday low and kind of limited some of the losses we've seen. But then there was some signs of strength in the product. Once again, all you could say at this point is still a short covering rally until you start to see something turn around in that cash index. At this point, no real signs of that yet. On the week, April cattle 174.75, up 367. On the June cattle 163.72, just up 62 cents, well off the high on Thursday. April feeder cattle 203.40, up 277 on the week. August feeders 223.95, up 135. April hogs finished on Friday at 71.75, down 240 on the week, and the June hogs closed at 86.87, $1.30 lower for the week.
And that again is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at countryfutures.com. Again, countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.